Welcome, everybody, to Market Talk number 9 with Robert Snyder from Silex Financial and Joe Valente, who could not be here today. He's probably somewhere nice on vacation, and we can't hold it against him. So,
No, I'm jealous.
yeah, same. Need a vacation from this market, that's for sure.
Yeah, it's crazy. But that's been crazy for a long time. But if it's not crazy, what is it?
I don't real estate, and the mortgage lending. Listen, it is controlled chaos at all
Yeah,
times.
I agree.
It if it's not one thing, it's another. And you're always having to adjust and adapt and maneuver to figure out how to make things happen. That's for sure.
That's what keeps it interesting too, right?
What keeps it interesting, and then sometimes you just don't even want to get out of bed. You're like, oh my god, I got to do this again.
I thought it
So
was just me. Okay, I feel better.
no, it's both of us. We're on the same page, Bob. We're on the same page. So let's give everyone a market update of what we're seeing um throughout the United States, locally, um, just so people can figure out what's going to be best move for them and they can figure out how to adjust in today's market. And then we'll kind of go from there and go back and forth and answer some questions. So would you like to start off, sir, and give us what do you see in the mortgage world? What are you seeing in the short term right now and potentially, in long term? What do we got going on?
It's interesting. Rates have been climbing again.
Yeah.
So just when you think that we may have um, calmed down and settled down in high sixes, they have firmly climbed into the sevens. And they seem to be continuing that way. It looks like the bond markets believe that the Fed is going to raise rates again later this year.
Mm.
For a while, the data was showing that maybe the Fed would hold off, but talk is that some increases are still not. We're not done with the increases, so the
Right.
bonds are pricing it in now.
Right. I'm hearing some rumors that um I could be completely wrong, but do you know what our inflation rate is at this time? What percentage we're at?
I don't know off the top of my head, but it's come way down.
Um, Inflation rate, because I believe what the so our inflation rate right now is at a
Yep.
3.18%. So what I think the Fed wants to do is see that at a 2, if not below a 2 for a lengthy period of time, because I think if they hover around a 2 or above for too long, it will just bounce up. It's got to they almost got to like put their foot on the fire and then stomp it out and kind of keep it at a 2 or less.
I think that, and I think really what they want to see is slowing of the economy, which they haven't seen much. So maybe a little bit higher unemployment rates. Some of the corporate earnings come slowing up a little bit. And that
Mhm.
hasn't happened yet. So I think that's part of what they're concerned about is that the economy is still strong. So if they don't continue to raise, inflation will bounce up, like you said.
Yeah. So I think, but I will, by their actions of just increasing the mortgage rates, actually bring inflation down long enough for them to lower it back down, because from we are 50%, we are 50% below inventory numbers from 2019. That's that's a crazy number. So um even if they hold the interest rates up for a longer period of time, like how long do you think they're going to have to hold it there to really decrease the supply and demand? It's
I don't know. I mean, I really think that the um that's a great question. I don't have an answer for
Yeah,
that.
because I don't listen. I don't think Bob, if we had all the answers to all these questions, I think we'd be
Yes,
sitting on an island somewhere or a really nice yacht, and just kind of floating around, not having a care in the world. What do you think?
I think it's a great idea. I think that the only way that the inventory issue no longer is an inventory issue, and
Yep.
we're done with that, is mortgage rates coming way back down. So all
Right.
those people that are in the threes and twos and even low fours turn around and say, well, I need more space. And now that rates are in the high fours, I
Yep.
can tolerate that switch,
Hmm.
right? Whereas those who have that 3% rate now are like, well, why would I buy a house at 7%? Even though we're busting at the seams and my kids are all in one room, I don't want to do it.
That's right. You just tell the kid to get a sleeping bag, go outside.
Right? Get used to it. We'll put a tent in back, right?
That's it.
Start-
That's it. You get tell the kid he gets his own condo, with the
yeah,
tent.
yeah,
That's
that's a two family now.
just no bathroom or closets. There you go.
I mean, I think I've been thinking about it so much. That's the only way I think that we have any more inventory. Come on.
It is. I agree. It's going to be a combination of two things. The interest rates coming down to have the current homeowners release that property and be able to move.
Mhm.
But at the same time, that will increase the buyer pool, which could increase sale prices. Again. But then we need builders to obviously build as well. But there's only so much land in the Northeast, so that could be for locally that could be an issue. But Warren Buffett just invested $814 million in home builders like DR Horton, Lennar, a couple of the home builders. He knows that supply and demand is really struggling, and we just got to build more stuff.
Yeah, and the
So,
builders just going to continue to build where they can, and they're making money, right?
yep. Which which is another indicator that all the headlines about 6 months ago, how the market was going to crash and real estate market was going to tumble and sale prices were going to plummet 20%. If you have someone like Warren Buffett dumping, half a billion or $1 billion into home builders,
Mhm.
do you think the housing market is going to crumble and crash and just disintegrate?
No, I don't see that at all. I mean, you
No.
can come back to this video if you want. I don't see it. And tell me and remind me I'm wrong. I
Yeah.
still don't see a crash in the future.
Listen, and we can't predict the future, but I can guarantee there. I mean, there are so many, Forbes, all those, every new like 6 months ago, every news was saying like the real estate market is going to crash. I didn't see that, so I
I
mean, they're retracting those numbers again.
Do you see are anyone out there still saying that? Because I think that's calmed down a little bit. I think people have gotten over that and they realized that they were beyond that.
Hmm. Yeah, no, that's now they're talking about how now they're predicting to figure out how much homes will appreciate year over year. That's it. That's the new thing. Um, you know, we have obviously the new school year starting and stuff like that. So we could see even less homes on the market right now and the market softening a little bit. I have seen some price reductions on properties. So I think there
Okay.
is this I think there is a ceiling on some things that buyers are willing to purchase. I mean, obviously it has to do with particular properties and circumstances of the property, but we are tapping the ceiling on some list prices. That's for sure. I've seen that. But there is still multiple offer situations, waiving appraisals to a certain amount, waiving home inspections to a certain limitation. That is still happening, and it's gonna happen for a while. That's for sure.
I'd
Um,
say over the past week and a half, 2 weeks, I've seen a good slow up in offers made to go to
yeah.
your inventory. It is the last couple of weeks of summer. I think people are taking vacations and getting ready
Mhm.
for school year. I don't really fully believe in the cyclical markets that we used to see, but I
True.
do that people are a little bit preoccupied at this time of year, just like they are in that couple weeks of June where there's
Yeah.
graduations and all that. So
Hmm.
I think that that's there's something to said for that. But I think come September, you'll start seeing some more activity again, right?
Yeah, I agree. I would agree with what you said. I don't think it has to do with anything with seasonality of things. I just think, like you said, people are occupied, busy, trying to squeeze out the rest, last couple of days of summer, getting vacations in,
Yeah,
school, kids getting ready for school. So I just think that some people just have a lot going on. So
yeah, yeah.
um
But I think we'll see September, October. people out looking multiple offers. We're starting to get calls on renovation loans. I
Mm,
think some of these older properties that need work, I think people are finally starting to consider them because they're tired of looking and waiting around.
yeah, yeah. And yeah, especially because renovation loans, or they can, figuring out how much their home is worth right now and maybe pulling some of the equity out of it
Hmm.
as well. So there's definitely a couple options there. Excuse me. Um, but yeah, I think that is the gist of today's market, is that inventory is still the issue. Interest rates are still coming down because the Fed is trying to obviously, keep inflation down. I think it needs to hit that 2% and below for a little bit of time before we we see anything really drastic, you know,
So,
drop.
what interest rate for mortgages do people just stop looking? Do you think there is a rate? Do you think that it'll hit a number and then people are like, whoa, 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 that's just too high? Or do you think at this point, what we've seen is will continue that they've been looking for so long that the rate isn't as big of an issue as the payment?
Hmm. I think the payment had I think I think the rate is what they see, and I think the payment is what they make a decision on.
Yeah, that's what I'm trying to tell them.
Yep. Because no one knows the payment until you pick an offer price and you know what your taxes are,
Yep.
right? So in the media, all you hear is interest rates. But and Bob, when you and I are talking to clients, we're like, listen, here's the interest rate, here's your offer price, here are your taxes. Let's figure out what your monthly payment is, and we can make sure that you feel comfortable with that, and then we can make a decision.
Yes.
It's not just the rate, because you can have a 5% rate and your taxes are only 2 grand a year, but you can have and you can do it, but you have a 5% rate and your taxes are $10,000 a year. It's a big
Huge
difference.
difference. Yeah.
Huge difference.
Yeah. I told someone yesterday, I said, people worry more about the rate than they do the property taxes, and the property taxes from town to town can vary greatly.
Hmm.
Not that your rate's important, not important, but the property taxes you're stuck with and will continue to go up.
Yeah, they're
The
never going
rate,
down.
at some point, you hope will be able to refinance.
Yeah, you hope. I think five. I think five. If we hit 4.5 ever again, I think the floodgates will just open up.
Hmm.
Um, I think if we hit five, I even think that will happen as well. I
I
think
do
it'd be
too.
pretty. I think it'd be pretty crazy.
Especially if we stay up here in the sevens for a little while. I think five will look normal again.
Yep, five will look
Right.
normal.
On the way up, when it was going from 3 to 4 to 5, when it hit 5, people looked at me like, "Oh my God, it's that high."
Yeah,
But 5 will look normal again.
it will. It will look
Mm.
normal. But I don't know. Like your question of when's enough. Um, I do think there is a line where people go, oh, all right, no, no way, because
Yeah.
it's not like the 80s when you could have a 15 to 18% interest rate, but the house is only worth $80,000.
Right. It's much more affordable. Right.
Right. There is that threshold. And what, like, I think if it were to hit 10, like, good night.
Yeah.
I
I
think,
think
yeah,
I think 10 is probably a fair number. Maybe nine, somewhere in the nines, but
yeah,
uh, I think 10, that'd be a little scary. We'll see.
yeah, that would be scary.
Yeah.
Especially because, like I said, the home prices are, I mean, people would just sit on the property, would the home prices plummet at that point, or the appreciation rate year over year, would that continuously, like, I think that they want to stop the economy, go to 10.
Yeah. That'll stop a lot of things, right?
Yeah, go to 10.
We'll have to see what happens.
Yeah. But anything else you would like to add, my friend?
No, I think we hit it on this one. I mean, I think that it's a very it'll be very interesting to see what happens in the fall, right?
Definitely. Definitely. If anyone gets anything out of this, just remember Warren Buffett invested in home builders. So
Yeah.
if if he thought the real estate market was absolutely going to crumble and crash and go back to 08, 07, he wouldn't be dumping $1 billion into it. So
I'm gonna go call my advisor right now.
sounds good. All right, and we're not giving any stock advice. Disclaimer as well.
No, definitely not. But
Yeah,
maybe you can just follow Warren Buffett if you want, but
there you go. So, all right, my friend. Well, thank you for jumping on. As
yeah,
always, it's
thanks for
always a
having me,
pleasure,
Jason.
and
Yep.
uh, and we'll talk again soon.
I hope Joe's listening from a beach somewhere.
I know, I know. We're gonna give him. We're gonna definitely got to give him a hard time.
All right.
All
Hey,
right, buddy.
thanks again, Jay. I'll
Yeah,
see you soon.
sounds good, buddy. I'll talk to you.
All right. Bye.
Bye.